Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you already haven't. Just a little disclaimer, nothing said should be construed as financial thought. Financial advice. This is just my opinions and thoughts on the market. Let's get into today's stuff. What a day. The market got smacked around, tried to rally back, but then got smacked down again. And it looks like the Nasdaq was not as bad as the other ones. But look at this movement, and this should uh, there's probably a whale seller. And of course, if you look at it, 43 200 gaps down, comes down, and it around 11:30 at bottom, and it really rallied all the way up, reaching where the Nasdaq. I remember the Nasdaq being in the green, but at 43 thousand. But then at 3:30 just tanked, went down, and it finished really down on the day, down 670 points, 1.5%. Doesn't have the after hours, and I think there was a little bounce after hours due to like news or whatnot. So yeah, the Dow futures is up. But you can see, look what's happening. The Dow Jones market, really bad news today. I think it's due for a bounce, and I think it will bounce solely due to Trump caving on tariffs. But RCM tip economic index, that's if you look at this optimism, that's still in contraction. So sentiment's still pretty bad. And let's look at the CNN fear and greed index. See where that's at. So still some fear in this market. It's due for a little bit of bounce because fear to greed. So this will probably be the last year of any market stability. I think next year, I mean, the tech bubble is going to burst. We're going to have credit card loan defaults, especially now with all the layoffs. We're going to have how a lot of people, they're losing their jobs. They're going to sell their homes. And lastly, not just homes, but there will also be auto loan delinquencies. So, uh, wanting to get into another couple of things, and this was big today. Well, not that big, but in terms of the trade war, and just basically sum it up for you, Canada already won, but Trump announced tariffs, and so then Canada they canceled Starlink, the Canadian Premier. It's in Ontario. That's probably what got him. Yeah, Doug Ford, Premier of Ontario. That's probably what got Trump to cancel the tariffs. You can't have, it was affecting Musk. So right there, canceled. And the other thing too is if you look at this, uh, Howard, no, this is here it is right here. Natural gas extends rally as Ontario an electricity export tax. If you look at that, and the thing is, we need Canadian electricity, so we can't just not pay this. So you look at this. Doug Ford said the province will place a 25% retaliatory export tax. It sends to Minnesota, Michigan, and New York. So we're going to have higher utility prices now. So it's basically if he moves ahead with the tariffs. So And look at this. Also prepared to stockpile nickel that the province's miners usually sell to the US and sell to other markets if more tariffs are added. The thing is, they have all the natural resources. That's what they export. Canada doesn't need the United States. They can sell to Asia. Many Asian countries will buy it. Japan's natural resource dependent. They can sell oil there. They can sell oil. China's always buying natural resources. The big misunderstanding in this tariff fight with Canada is Canada needs the United States more than the United States needs Canada, when the opposite's true. Canada, from an economic standpoint, doesn't need the United States. They have all the resources. They can sell it anywhere. So, and of course, what happened is Trump eyeing Canada, Mexico, tariff relief statement. So right now, as soon as Canada just fights back a little, it's not even Canada, it's just one province. It's a big province, but they have a relief deal. So he already lost the trade war to Canada. It was dumb. It was dumb for even picking it. Canada doesn't need the United States. That's what you have to understand. They don't need it. The United States actually needs Canada. So, uh, in terms of the markets, if you look at it, if you look at if trade war warn anything, is that one thing it will tell you is that QE is coming. Massive, massive, massive amounts of money printing and massive amounts of quantitative easing is coming because we're in a huge bubble. The market's declining. Look at the interest rates. I want to see the interest rates real quick. Look at the 10-year. And I might share my screen again. So it was the interest rates were up today, but I don't think they've been up for much. So like on a 5 day, look at that, down 2%, down 6% on a monthly basis. Now on the 6 months, it's up 11.73. But I think there'll be interest rates will continue to go higher as debt continues. It's not getting cut. They're not gonna, in fact, what I think will happen is there's gonna be a big fiscal stimulus coming, and that will blow up the deficits. Not only that, combined with tax cuts, it will be like supply side economics. And then what will happen is after all that occurs, deficits and interest rates will blow up, and QE is coming. And today showed you, even though he wanted to go do a trade war, when you have the market like the S&P, just look at the 5 day. You just look at it, 2.5%. This isn't even relatively near a crash. See, these are E-mini futures. Let's do the spiders. Let's just look at the spiders ETF. That's the mini futures. Look at the S&P down 6% to down 1.18%. Spiders. Look at the 5 day, 2.92%, down 4% in a month. If you look at it, this he's going to cave. And as the stock market continues, there's going to be more QE coming. Big time QE is coming. So anyway, that's all I have. Remember, not financial investment advice. Um, and the thing about QE is I don't know how much it's going to work because I think the credit card debt, the auto loan, that's going to be deleveraging. May not work this time. So anyway, hit that like button, subscribe, and I'll see you next video.